So Brian, very interestingly, we've heard a lot about the potential for internationalizing offerings. But from an exchange implementation point of view, we've heard about trading and execution, clearing and settlement, data and reporting, all related to some form of technology. Could you tell us a little bit about BTA Consulting, your experience with exchanges, and potentially your role with the MICEX Group? Thank you.
Yeah, thank you, Robert, and thank you to Terrapin for inviting me here. We advise a number of exchanges around the world, and currently one of our largest clients is the Swiss exchange, and I was intimately involved in the SIX LiquidNet service that you saw Seth promoted a bit earlier. So at the moment, in terms of what we're doing is looking at some of the strategic issues facing SIX and other exchanges, and in particular on this particular issue on mega mergers versus national interest, etc. I think there's a key issue that Seth pointed to earlier that I'd like to pick up. So what Seth was saying is that there's a big analogy with the airline industry, but from a national exchange point of view, it doesn't always apply. So in terms of the national or the international airlines, they've been either creating alliances or merging or whatever to get economies of scale and providing an end-to-end service. Exchanges have been doing a similar thing, but there's one big difference, which is that exchanges have a big role from a national interest point of view in developing the economy of an exchange. And where these exchanges have been demutualized and listed, sometimes that has been lost, and they're now just regular companies that are trying to maximize the wealth of shareholders, and they're not necessarily connected to the development of the economy. But for those smaller ones, for example, like the Swiss exchange, which is still a mutualized exchange, there is still a big connection with the local economy. And that is particularly important because when in a crisis event, if the whole infrastructure and also the whole brand was outsourced to another country, to another exchange, then during that crisis situation, it may not be possible for the government to control the process during that crisis. So for example, given you're from UBS, when UBS went through the crisis and had solvency issues, the Swiss government stepped in and helped to resolve the solvency of UBS. If the Swiss government did not have access to its own exchange, the CCP in particular, which is part of the whole vertical silo of the Swiss exchange, and it didn't have access to liquidity provisions through the exchange, it wouldn't be able to help during these crisis situations, which is more and more important. So going back to the airline analogy, when there is a crisis at an airport or with an airplane, and say for example there's fog at Zurich airport, well then a plane can be diverted and it can land at Frankfurt or another airport. When there's a crisis with a national exchange, it is not certain that the economic goals of the country can be resolved if that exchange is completely outsourced or under the control of another company that actually has no connection to the national economy of an exchange.
So Brian, let me share an insight as a humble user. We noticed that the Swiss exchange, the clearing and settlement entity SIS Segel Intersettle, and the market data company Telekurs combined to create a SIX group. Mm-hmm. And yet it also seems, while having one corporate entity, a strategy of being very open, particularly noticeable in the market data. Telekurs is in many markets worldwide. The clearing and settlement is used in a lot of interoperable models. Can you share some insights on the possible benefits from a decision-making point of view through that type of functional silo, corporate silo, and maybe also the benefits of having an open strategy from an internationalization perspective? Thank you.
So a few years ago, the owners, the Swiss banks, etc., brought the whole of the Swiss market together under one company called the SIX Group. And what that does is provide the entire financial infrastructure to the Swiss market and abroad. That doesn't just cover the exchange, the market data, the clearing, the settlement as well. It also covers cards, network infrastructure, real-time gross settlement system, and other payment systems. So they're developing true economies of scale across the whole financial infrastructure. In terms of an openness point of view, you will have seen that xClear has probably pioneered the whole interoperability model, and they started that with LCH about 6 or 7 years ago, and they then is going forward with other markets, and they're providing services to UBS MTF and other MTFs and recognized markets around Europe and the rest of the world. And the whole idea is to drive economies of scale into the platform and provide an international access to the user base. And the relevance of that is, from a national economy point of view, essentially the domestic market is saturated for SIX. They have as much as they can get. So it's about internationalizing now to lower the unit costs.
So Brian, I'm going to ask you a question, but may I invite Dr. Emirdag to come up from the London Stock Exchange Group. And while she is joining us on stage, I've read actually in this excellent Equinix magazine the case study of the SIX Swiss exchange going to be using the state-of-the-art NASDAQ OMX technology. Give us some insight around build or buy type of decisions of an exchange. Welcome.
So for small to medium-sized exchanges and also large exchanges, there's this big issue of build, buy, in fact, or rent an infrastructure. So in the SIX case, SIX still competes very heavily with Chi-X, BATS, and other MTFs in Europe, and therefore it needs to keep up with the latency and functionality demands of that industry, and therefore it is now invested in a new version of the NASDAQ OMX platform, and it will be launched in April, and I think you'll see some impressive results from that. In terms of there is no way that SIX or another similar sized exchange could justify the costs of building that infrastructure, because you just simply, going back to the economies of scale point, you can't get the unit costs down low enough. And also you need to leverage the research and development of a platform provider. But so the Swiss decision, and like most exchanges around the world, is buy in a solution from a provider, NASDAQ in this case, and there are other providers in the room. And for example, as you saw with the LiquidNet infrastructure, the actual matching, etc., is all organized by LiquidNet. So that is an outsourced service where essentially LiquidNet is providing two services, one as a broker and one as an ASP service provider. So essentially, I believe the small and medium-sized exchanges simply cannot justify developing their own infrastructure. They have to rely on third parties.
Well, thank you, Brian. Well, let me come in and bring in the London Stock Exchange. Ladies and gentlemen, if you were reading yesterday's Financial Times, you may notice on page 3 the most recent results of the Zien International Financial Center study amongst 77 centers, and the headline is "London Stays on Top of the Finance League." Now, interestingly enough, London Stock Exchange, it's not just about the UK. You've got Italy, you've got Millennium IT from Sri Lanka, you doing cash derivatives and other things. Dr. Emirdag, tell us a little bit about getting closer to the customer. What customer themes as exchanges do we need to consider to continue to do what Seth Marin was encouraging in terms of diversification, differentiating, and developing? Thank you.
Oh, that's interesting. Okay. So customers. So let's first a little bit define what customer means for us, because we have a lot of customers from different backgrounds. As we are an exchange, and being an exchange is, as we heard before, is not only about trading, it's also about raising money. It has a certain place in the economy. And in our case, it's we are managing a quite international exchange, as we talked about. So we have about 3,000 companies that are today listed on the London Stock Exchange. About 600 of them are international companies, and So these are our clients, as well as 450 or so members across Borsa Italiana, Turquoise, London Stock Exchange, the UK market that we manage, and as well as the derivatives markets that we manage, as well as the cash. So it is a range of clients that we try to serve. Frankly, the common theme for all our clients really is that they just want to find opportunities to make money through leveraging our services. That's what it is. So if we narrow down the topic to my area, which is the team that basically I'm managing at the London Stock Exchange, is looking after the equities and derivatives trading clients, secondary trading clients. That is 450 or so members across our platforms. They are very, very different than each other. You have investment banks, you have electronic trading firms, you have different types of HFT firms, which I don't even know how to define them anymore. And you have retail brokers, you have market makers. We have a range of clients from different geographies. They're completely different than each other. Every time you go to one of them, it's different than the other. It's just quite interesting. But the common denominator here really is that they all try to make money. And they have the objectives that they have. For example, some of them are trying to find trading opportunities. Large investment banks are looking at their business models for next couple of years. What will the regulation bring to table? How are they going to trade certain instruments? Are they going to be trading on an exchange? Are they going to be reporting? Are they going to be clearing? There are all kinds of topics that actually is on their mind, and it is about creating new opportunities, making more money. So why is this important? Okay, it's important because I think the best way to work with a client, I mean, when I was a client, it was what I always hoped for, is to hopefully help them make money. In that case, if you can actually create an opportunity for them, show them an opportunity, teach them something they didn't know, work with them on something, this is a true partnership. It's not just a cliche. It is not just the title on your presentation when you go to a client. You just really mean it. And we do care about if you have that kind of mentality. We had a number of topics before it, but that was a topic about being agnostic and open access. In that case, I mean, it goes very much hand in hand with that, right? Because what I'm saying, because again, it's not we do want. I mean, it ultimately clients need to have a choice and connect to the markets that they want to trade in the way that they want to trade for what they are trying to achieve. If we are launching a new product, let's say, I mean, frankly, I mean, we all went through this. I mean, in one way or the other. Usually, it's a typical dilemma. A product development team, and frankly, I've been part of those as well. Thinks that there is certain things that they should be building a product in a certain way, but if it's not what the client wants, honestly, it is not a product. I mean, if they don't use it, they don't build it the way that client wants it. It is not if it's not an opportunity for them, it doesn't make sense. So you do really need to partner with the clients. So that all goes into a number of examples. I mean, with Turquoise, we work with our clients. There are the shareholders of the platform. But frankly, that's not even that much sufficient, because if you have the mentality to work with the clients, you don't really need to have them as your shareholders alone as well. So, I mean, that is just the way that we think about everything in general, I think.
Thank you, Dr. Emirdag. I would also like at this stage to invite a very distinguished expert, Vahan Vardanian, the CIO of MICEX-RTS. And as he's coming up, Dr. Emirdag, just a follow-up question. We heard from Brian about the SIX Group going with NASDAQ OMX technology. The London Stock Exchange Group and Turquoise recently upgraded in the last year to Millennium IT technology. Can you share a little bit of the insight? I mean, you liked the company so much you decided to buy it. I mean, what was the context in terms of that type of decision-making process? Thank you.
Well, I wasn't there when they were making decisions, so I'm not quite sure about the decision-making process, but I actually have known the company for a while, and Millennium is a good company. It is a good technology for especially cash equities. But I need to be very careful here, because I think, again, the important thing is the client experience. I mean, you may have the lowest latency platform, which is the case. In this case, for Millennium, it's a low latency platform. But it is not what the clients need. Frankly, again, it's meaningless. I mean, what is the point of having a low latency platform if it doesn't necessarily fit the competitive landscape and the client's needs, the needs of the clients that you're trying to serve? In our case, it happens that we are in a landscape in Europe where our clients are really very, looking for a fast technology. Our competitors are quite fast. They are actually they're also looking at consistent and stable technology as well. They're looking for consistent and stable technology as well. So that's also important. I mean, Millennium really does work for us. You know, it's the clients are finding opportunities to trade on the platform with us. But also, I think it's important to understand the landscape, because trading is not only about like UK stocks, for example. It's not about the LSE order book. It is about their other choices. And they look at the world as an ecosystem of marketplaces in this new technologically enhanced landscape with algorithms that Robert mentioned before. They find new trading opportunities with that. And in that landscape, Millennium and LSE, for example, order book as well as Turquoise and others as well, they serve a purpose, and it works for us for this reason.
Well, thank you very much. Well, ladies and gentlemen, for those of you that are reading this Equinix magazine, you'll notice the cover story is all about Russia coming online. And very delighted to have a representative from MICEX-RTS. In fact, yes, BATS, Chi-X Europe being an MTF, a multilateral trading facility, did combine at the end of last year. But of all of the exchange initiatives that were put on the table in 2011, there was really only one exchange proposed merger that actually completed successfully, MICEX-RTS, on the 19th of December. And it's not just about a merger of MICEX and RTS bringing together a supergroup within Russia. There seem to be a number of fundamental initiatives, not just to build the domestic market, but also to attract international investors. And Bahan, might I ask you to maybe share a few insights about some of the projects, like moving from T0 to T+3, the CSD and CCP, and of course, DMA and the state-of-the-art technology. Thank you very much.
Thank you, Robert. Indeed, 2011 was, and probably 2012, the trend will continue, was a tectonic change. We've seen actually a tectonic change in the landscape of the market, something that the market hasn't seen for at least 15 years. As Robert mentioned, the merger of exchanges is an important step. It's creating an infrastructure, but what's more important is actually how the exchange, market participants, government and regulator working together to create an environment, enabling environment for both improving infrastructure for more domestic investors, domestic participants, and global participants. Just to mention a couple of projects that the teams are working on, already mentioned actually in this magazine. It's introduction of T+3 trading and settlement with central counterparty that's going to go live second half of the year. That's probably the single hurdle that market has seen, and after falling that barrier, we could call it Moscow Wall. The Berlin Wall failed. I think this is probably Moscow Wall that will open the market for a number of participants. Introduction of central depository, that the law has been passed just this January, and throughout this year, central depository will be created, which is also part of the MICEX-RTS group. So MICEX-RTS is a vertically integrated group with the trading venues, spot and derivatives, clearing company, and securities depository. Just recently, we launched DMA for FX market, which is another, just opening up that market for non-bank organizations. And last and not least, introduction of or strengthening our DMA offering, providing connectivity solution, collocation offering, and working very actively with our local and international brokers to ease connectivity, to make it more understandable, predictable, and reliable. So that's going on, and I'm sure if any of those who are interested can give you more details. I guess that would be probably a small subset of things which are happening.
Thank you very much. Ladies and gentlemen, any questions for our distinguished panel? Mr. Randall. Thank you very much.
Yeah, hi, Peter Randall from Aqueduct. Brian, interesting discussion, I thought, about the ability to be able to affect change if things really went badly wrong. But to what extent do you think that Switzerland, like the UK, has a big advantage in the sense that it has control over its own currency? If you have control over your own currency, you can pretty much do what you like.
Yes and no. So I agree that Switzerland and the UK are, for example, in a much stronger position than, say, for example, Greece finds itself today, where it can't control its currency, can't devalue, etc. But essentially what I was saying is, if you've got a crisis situation and the exchange is outsourced or alternatively owned by another exchange outside the country, and your banks go bust, and your banks are central to the systemic risk management of your national economy, it doesn't matter how much the central bank of that country intervenes, it cannot necessarily control the processing path that the CCP in the other country may operate. So if the CCP was operated in country X, and they were having to resolve a banking crisis with, say, two banks, one a Swiss bank and one a bank from country X, where they're faced with the choice of allocating limited capital, and the prime minister or president of that country rings up and says, whatever you do, you've got to make sure the liquidity of the capital available in the CCP is allocated to our bank in country X, and don't worry about this other bank from another country, then you'll never know that happened, but you'll only know that there wasn't adequate capital for the bank that you're trying to resolve. So if you're a country which has got control over your currency, you also need control over your vertical silo. And it's not enough just to have the CCP, because the CCP also needs the exchange to get access to the liquidity.
Another question.
So by implication, that means that interoperability between clearinghouses can't work?
It's interesting. It can work. I don't think it's necessarily been tested to extremes in crisis situations, although it was in place in 2009. So it should work.
I'll just interject. I think that's a great question, and we've got a great anchor panel coming up at the end of the day. I think just as an interesting soundbite, Peter, you raised a very good point. Interoperability in the cash equity space has been live since 2003 in both the Swiss market and then in 2008 in the UK market. And through the biggest crisis in the history of the financial capital markets, those fully interoperable markets performed very well. So we can follow up very late. But I have another question. But before I do, I see Olof has a question at the front row, please. Thank you.
Yes, Olof Nervik from Bergen. I just have a follow-up on that national versus global, or at least European choice that the sharks around the bank's trading desks today are exploiting to the full extent. How do you convince your local banks that they should pay a premium and trade your core stocks on the local market at a higher cost compared to BATS or Chi-X? What's the selling point?
So in the case of the Swiss markets, interestingly, I think there's a couple of issues here. So on the latency point, what you might observe is that all those exchanges that are based out of London, so the London Stock Exchange, have had the biggest fight because the competitors are right on their doorstep and the latency is more predictable. Those countries with a greater geographical latency, so Nordics, Germany, Italy, Switzerland, have retained the highest levels of market share in the fight on latency. And to understand that, it's actually quite difficult to understand why. But the additional factor on the Swiss market is that it has the largest average execution size of any exchange in Europe. So it's maintained the buy-side focus of the market with large execution size. And then there's a big drive for quality of service and looking after the needs of the local market. Having said that, there's still a large outflow of particularly of the two large banks, Credit Suisse and UBS, who trade a significant portion on the external MTFs, the UK-based MTFs. So it's not an easy battle. But the one thing that the Swiss exchange hasn't done is entered into this endless recalibration of the tariff structures. Because what has been observed on the tariff structures is that where the other large exchanges have tried to bring in these different changes, they've had short-term market share gains, but not long-term sustainable gains from all of the tariffs. So I'm sure Pinar will have a view on this.
I'm hoping to hear an answer about quality of the flow.
Yeah.
You do know what I'm going to say, right? No, it's. I think it is really about quality of the product. I mean, let me actually describe what that landscape is a little bit, because our world has changed. I mean, it is not the same since implementation of the MiFID. The position of any primary market, it used to be, is not exactly the same as then, and also it is not the kind of the product, because of the technology, because of the technological advancements. Actually, the product actually became a completely different product. In fact, I would say the order book itself actually became a product where you can actually start talking about quality of the flow and the different types of interactions and the different types of opportunities that people can find. And they have tools to access all the different competing products as well. And frankly, I think it is more about what the experience of the clients. And service, of course, is important, being all of these things are, kind of de facto what you need to do. But also, it's an everyday fight, literally, to make sure that that what we call that product, which is the order book, actually is a good order book. And it goes from like the order types to the certain strategies, access, connectivity methods, everything that around it is the game that we need to play, optimize, to make sure that that order book actually is a diversified quality order book that people pay for.
Actually, I'd just like to follow on the quality of the flow. Clearly, there's motivation to trade Russian exposure on London because the current market framework seems to be efficient from an international investor perspective. But I'd just like to share a few insights and then ask our distinguished expert to share a few comments. As a humble student of the market, let me just share some interesting data points. It's a supply and demand relationship that drives order flow in a particular market center, and the ability to reduce the slippage costs. So if we take a look at interesting changes that seem to be coming up in terms of demand, things like privatization pipeline, which the Russian government recently has made public, things about pension reform, and let me give you a data point. In the public domain, 52 billion of pension assets in Russia. Today, less than 1% actually invested in the stock market. And we believe, based on the public statements from the government, this is likely to change. I mean, if we take a look at a comparative example like Poland, where the Warsaw Stock Exchange has benefited from the government focusing pension assets directly invested into the country, it's very interesting. Warsaw Stock Exchange has provided statistics that from nothing, pension providers directly are now responsible for 7% of the turnover on the order book, but more interestingly, pension reform catalyzed the development of an institutional investor base that today is responsible for about a third of the turnover on that market. So coming back to, interestingly enough, the relationship between London Stock Exchange and MICEX-RTS, and clearly this interesting investor interest in Russian securities, when we take a look at the value trading only of the on-order book activity of MICEX and RTS, it's only about 4% of Europe. I mean, there's clearly more off-order book activity. But as these changes are happening, it looks like there could be a lot more interest. So the reason why the CSD legislation seems so important is that today, many US mutual funds do not directly invest in Russia because the SEC has not recognized the CSD. That looks like it's changing. The reason why many people do not directly invest in Russia is because the T+0 is effectively a pre-funding which adds to the cost compared to T+3. So my humble question to both of you is, given the success of the international order book in capturing liquidity of Russian names, as MICEX-RTS is leading into developing a state-of-the-art regulatory as well as technological framework, do you see the outcome a potential repatriation of the liquidity onto MICEX-RTS, or is it a case of a rising tide lifts all boats? Over to you, sir.
Start. I think the interest we see towards Russia will generate enough revenue to basically rise both boats. It's not going to sink one or another, I think. That's for sure, because the interest we see from our investor, from the clients, justifies that. And the majority of the competition comes with the OTC markets. Even if we take a percentage of a fraction of OTC markets back to the exchange, it's going to be a big change for us. So from that perspective, I think that's really is going to be beneficial for both. The question was originally, the question asked was about how we handle the relationship, that the move to different, from primary markets to international markets. First of all is the cost of transaction. Certainly banks go where transactions are lower, so working on that. Quality of liquidity is a second point, and a domestic pension reform, domestic retail market, retail investments and pension reform will help that, and that's certainly coming up. Even if you increase it by, by 2 to 3%, it's going to be already a big change. Privatization of roughly $14 billion worth of companies has been decided is going to be on the floor of the exchange. I think with those things, and generally interest to the country, because if you look at the statistics and the volatility, it provides very interesting numbers and very interesting opportunities for both long-term investments and for both high-frequency players. Just not many of you know that close to 40% of current MICEX-RTS volumes are done by HFT. That's a not very known fact, and it's actually growing. So having said, I think we are looking forward to those changes. They're going to increase our volumes traded. We're going to make our trading venue more attractive, more interesting for various firms, small and big, and it would be up to them to decide where they want to list. Another addition, another project that the exchange is working on is also allowing and accepting international securities. Again, it hasn't been recently announced that the regulator will also accept English language prospectus, something fundamentally will ease listing on the acceptance actually on the exchange. So I guess.
Thank you. Well, I'm not quite sure if I will be very controversial at all, because I mean, frankly, it's quite clear. It's the situation. In my previous answer, I was talking about the trading landscape as not necessarily in the UK, for example, not necessarily being the UK order book, the LSE market alone. It's a kind of a landscape from a client's perspective. It is a number of venues the clients can trade in. That means that they also find opportunities trading in those number of venues, sometimes in strategies that are linked to each other. That is today happening with the Russian local market and IOB, International Order Book. So that landscape is already somewhat in place with the local Russian markets, and it is actually a quite interesting landscape. And so as long as, I mean, maybe this is a very simple belief, but as long as there are opportunities for clients to make money, you know, that actually kind of helps longevity of that landscape, helps with the longevity of that landscape. Another point to make is, I mean, IOB now is also quite interesting marketplace. I mean, we did sign up about 30 clients in 1.5 years or so. There are about 90 participants on the IOB order book itself, and the distribution of the way that of the participants is also changing. This is also quite interesting. And again, talking about quality, diversity, and clients finding opportunities with the local market. I think the Russian market has an incredible potential with all the changes that they are going through. It's, they are going at a very, very organized fashion, you know, in a very organized way, improving the market landscape. And I do believe the future will be what you said, the second option, Robert. You know, hopefully all, what is it, rising tides?
Lifts all boats.
All lifts all boats. I never know how to say these things.
Thank you very much. Well, listen, ladies and gentlemen, any final questions for our expert panel? Yes, question in the front. Distinguished guest from Tokyo. Thank you.
Hi, I'm just come from the UBS Japan, which is it's most probably one of the undeveloped exchange competition situation in Tokyo. Just one question is, I think national exchanges, you know, has retained the self-regulatory organizations or self-regulatory functions, which most of the alternative trading venue have not. Do you feel this is unfair competition or a big advantage for the competition at the moment?
Thank you very much. So I think that's a very good question. Whether or not the self-regulatory role is still with the exchanges, and where that it does exist, does that change the competitive landscape? So perhaps I might start with MICEX-RTS.
I don't think that the self-regulatory role changes or actually hinders the ability of the exchange to compete. Moreover, exchange is actually stronger if the members actually feel committed and if there's a partnership spirit between the exchange and its members. In Russia specifically, I can comment, the role of the member community is extremely important. An exchange is working in pretty much every large initiative and project has to be not only discussed and accepted by user community, by member companies, member firms, but also it's required by the law. So, but it overall, and the result, it makes a market more stable. It makes a market developing in a partnership spirit. I'm not aware of the models in some other countries, but the model we've seen so far, I think helps overall the stability of the market.
Thank you. Brian, from the perspective in the Swiss market, does the Swiss exchange still have a self-regulatory role, or is it outsourced to another regulator?
SIX has a self-regulatory organization called Swiss Exchange Regulation, which forms part of the Swiss exchange and provides independent regulatory services and reports from a legal point of view directly into the chairman and also to FINMA, the regulator. So basically outside the market organization. With regard to the point about whether there's a competitive differentiation between, say, the exchanges and also the MTFs or even OTC, I think what Europe has done is overdone competition in terms of it's been competition at all costs. It isn't a level playing field, but luckily what MiFID II is going to do is sort that out and standardize between OTC and exchanges, MTFs, and other forms like OTF, systematic internalizers, etc. So it's how it's implemented, and then the regulatory role will be standardized, which will be good.
Thank you, Brian. Dr. Emirdag, you have the last word.
Well, I mean, look, I think about this specific topic, and I think it's a very, very interesting question, actually. You know, in my dealings with many different exchanges, when I was a client of different exchanges all around the world, frankly, I mean, it is again, the situation is not very different where you're coming from as an exchange. You know, LSE as an exchange has very similar responsibilities, challenges, the role in the marketplace. You know, sometimes this, you know, like it's basically the type of things that you think you may see as a constraint, but they are not quite constraint. I mean, it's actually that are the type of things that make you stronger as a venue that one should never forget. The same goes for a more regional exchange. The same goes for a local exchange. However you want to call different type of exchanges, I think the challenge is always the same, and it needs to be a neutral platform that you know, works with the clients and creates an opportunity for them to interact, to do their business. So, I mean, while you are constrained with those circles, there are a lot of things you can do within that, and I think the challenge is the same challenge for everyone, and the result is the same.
A quick follow-up: as the London Stock Exchange operates both the London Stock Exchange core market, Borsa Italiana core market, but also Turquoise, a multilateral trading facility, do you see that there is a level playing field amongst those platforms, or one has relative advantage?
No, I don't think that there is. I mean, frankly, again, the type of things we do, the type of, you know, let's say, decisions that you make for product development, for anything, from whatever you do with clients, pricing, everything is actually quite similar, frankly, for all the markets, because it is, after all, the similar type of question that you are trying to solve, create an environment, a neutral environment for clients to come together and do their business.
Right. Well, ladies and gentlemen, we are now at a significant inflection point of the day, ahead of lunchtime. First of all, let us thank our distinguished panel in the audience. Thank you very much.